Welcome, folks. This is a short tutorial over the flow and impact of above-the-line tax deductions, below-the-line tax deductions, and tax credits. So for all three slides, we're going to use the same example. Somebody with a gross income of $55,125, and this person is filing as a single taxpayer. In this example, because their gross income is $55,125, that would initially put them in the marginal tax rate of 22% because this person's income falls within that income band. Now, this person makes an above the line tax deduction. And for employees, this is primarily contributions for retirement. And so that contribution is $15,000. And that reduces this person's taxable income to an adjusted gross income, an AGI, of $40,125. And it's at that point where the person can determine whether or not they're going to itemize or take the standard deduction. So as you can see here, the example above the line tax deduction illustrated above will save 22% in taxes of the $15,000 contributed to the 401k. Because every dollar contributed would have been taxed at 22%, saving this person $3,300. So as a reminder, our federal income tax system works this way. The first 10%, the first $9,875 is taxed at 10%. The income in this band is taxed at 12%. The income in this band is taxed at 22%. And so that, again, leads to $3,300 in savings. And that's before we even get to below the line deductions and credits. So using the same example that I just used before, this person's AGI is $40,125. This person at this point decides, do I itemize? Example itemization would be mortgage interest. Or do I take the standard deduction? So this person decides, I'm going to take the standard deduction because that's the greater amount. In this filing year of 2021, the standard deduction for somebody filing singles, $12,550. So you just simply reduce this person's taxable income by that amount. So this person's taxable income is now $27,575. So as I said, in this example, the filer filing single took the standard deduction, leaving $27,575 in taxable income. That means this person's tax liability is $3,110. That's how much this person would owe when you do the math. When you flow through the income that is taxable through the first tax bracket and then the second. But we're not done. We still have a tax credit to consider. So in this just example tax credit, here's how the flow and impact works. Remember, this person's taxable liability is $3,110. Let's say this person received a tax credit of $3,000. So the dollar for dollar reduction in tax liability would mean that this person's final tax liability is $110. That's it, $110. Now, if the tax credit was fully refundable and exceeded their tax liability, they would actually get more money back from the government or more money from the government than they had withheld. So thank you for following along for this short tutorial.